Today's announcement by UK Prime Minister May that she's planning to hold a vote to dissolve Parliament and call a UK election for June the 8th has sparked significant moves in UK markets. So far, traders have been seeing this as a positive, an opportunity to clear the air before Brexit negotiations get going in earnest. Also to give UK voters an opportunity to weigh in on how their members of parliament have been acting relative to Brexit since the Brexit vote. There's been a number of cases where members of parliament have been opposing Brexit from ridings where their constituents actually had voted heavily in favor of Brexit. So this gives an opportunity now for the government to attempt to come back with a strong mandate for negotiations, as it's had a big impact on trading in UK markets. Overall, what we've seen since the beginning of the year is news favoring the move towards Brexit has been seen as a positive by currency traders in particular, but has been weighing on the FTSE. Since the Brexit vote last June, the FTSE has been trending in the opposite direction of the pound. This was because the collapse of the pound had ignited a rally in UK stocks because it made the things much cheaper and easier to do business for UK exporters. It also made the earnings of UK multinationals higher in sterling terms. So we have seen this dynamic continue to play out, and we're seeing it play out again today. So just going to highlight a few markets here, and what's most significant is that not only are we seeing big moves in cable and the FTSE, but also we're seeing this carry through into the how the sterling is reacting in other pound pairs as well. And so far we're seeing things have been bullish. Now we do expect that we'll see quite a bit of volatility through the twists and turns of the election campaign, but and quite a bit of trading activity going forward. Looking first at the UK 100, with sterling rallying, that's starting to weigh on UK stocks. We had this big uptrend here following the election as UK companies benefited from the lower pound. What we have been seeing though is as the pound has been bottoming out and forming a head and shoulders base, we're getting a head and shoulders top in the UK 100 in the FTSE, and the reason for that is because now if the pound starts to rebound, then some of the advantages to earnings that UK companies have seen could start to dissipate. So we see here over the last over the month of March, left shoulder, head, and right shoulder. We had a retest of shoulder resistance here in middle of April, and we started to trend lower. And look at this, we actually got overbought in January on the UK market. Big negative divergence at the head of this pattern in March, and we've continued to trend lower. RSI has broken 50. Today, it's broken the descending triangle, signaling momentum is turning increasingly downward for UK stocks. And what are we seeing here? Look at this huge red candle here. Not only did we take out the 50-day average, we've taken out the neckline of this pattern here near 72.60, continued to trend lower. We've taken out 7,200, trading near 71.65, still near the lows of the day. Next potential support levels in and around 71.50, and then in and around 7,100 for UK stocks. Meanwhile, as I say, we've had a head and shoulders forming in the stocks. We've had a head and shoulders bottom forming in cable. That's also been completed today with a big breakout over the neckline. We've gotten a big rally up off of 125, blasting through the 200-day moving average near 126.25, clearing 127, the neckline of the pattern. On top of being the neckline, we're also breaking out over this 23% retracement of the post-Brexit sell-off. That's also technically significant. And we've broken out here over 60 on the RSI. That's confirming a big surge in upward momentum for the for sterling. Next potential resistance is up in here around these previous lows around 129, and that's the 130 round number up in here. But we're not just seeing sterling take off against the US dollar. We're also seeing it take off against the pound, against the euro. Sorry, the euro had a massive rally against the pound when the pound collapsed. That's been just getting whittled away. And look at this, since early March, steady distribution, really nice falling channel here. We had a death cross in the moving averages. The 50-day crossed back under the 200-day. That was a sign the tide turning back in favor of the pound as well. And look, this is all getting confirmed. The RSI is right in gear, taking out 50, keeps on going lower, increasing downward momentum, continuing distribution. Look at this. Today we've taken out 84.60. That was a 50% retracement of this post-Brexit rally, the pound collapse, and now we're seeing this trend lower. We're testing 84. There's some support in this congestion area here. This is around 83.40. The 62% retracement level of Big E is down around 82.60. We'll just note the euro sterling versus the yen as well. This is a big distribution pattern here. We've seen it falling in a channel here, falling channel between the 250-day averages. Huge descending triangle forming. So far, this 136.70 support's been holding, hanging around 138. Do we see a breakout or not? If we clear 138.90, this is this first downtrend line, then you've got the 50-day average and round number resistance around 140. So far, still under distribution, but it does appear to be stabilizing. We'll see what happens. So we do see a little bit of action differently in how the pound is trading relative to the yen than relative to other currencies. Overall, though, with an election campaign getting underway, we could see quite a bit of market action in UK markets in the coming months.